Alright, we just entered a trade right here. It's going well, it's going well. We're about to be over 100 already. We're looking to come down to the 200 EMA down here for the 5 minutes. Just two lovers sitting in the cloud, listening to blind for each other. Picking north skies, feeling super childish, no Donna Glover. Missed call from her mother. Like, where you at tonight? I was all alone with the love of my life. She's got glitter for skin, you know that I'm talking about spite. Even like to see you shine. It's the golden hour. In your golden hour. We're gonna take the 100 this time if we can lock it in. There's 112. Go ahead and lock in that 137. All right, so that gives us 125. Everything above this is great. 150 would be awesome too. We'll take the 125. That's all I wanted to do. She knew she was. And then of course it falls further once I get out. But hey, I just want to do a little trade for you guys before we gotta. They're going to the 200 EMA. That's what they're trying to get to us right here. So the rest of the half hour, we should be trying to get there. We did the 200 for the 1 minute already. I'm alive. She's got glitter for skin and radiant beam in the night. I don't need no light to see you shine. It's Spice golden hour. Let me tell you, she slows down time in her golden hour. We would have got like 200 bucks out of that, but you know what? Hey, 125 is great. Let me go ahead and pause this music real quick. Just close it all together. Just wanted to come over here, do a little trade for y'all, have a little quick conversation about glamorizing what a lot of traders are doing out here. That would have been a quick $300 trade right there. We're going to go ahead and close this out. Don't worry about it at all. We're happy with what we got. So I want you guys to understand that this is going to get exponentially easier as time goes on for you. And I wish you the best. I hope right now you're actually not having that bad of a time. But I really want you to take the time to go to your 4-hour time frame, look for areas of consolidation. We're going to go to a single screen for you real quick and just look at the 4-hour time frame for you and break down how I'm breaking down these trades. So you see this mess. We're going to go to MES because I don't want it to be so messy. You see that mess there or whatever. This would be the zone that we're trying to fall back down towards. When we like really fall, this is where we're going to be coming to. But we had this zone in place based off of this right here, right? Then we're going to mark this out for you. Create that, make this smaller, select this way, and then we're going to take a trend line, and this is what I do. I take trend lines, and I just run them across these white lines to the new days. And this will be one of the first areas that we stop off at, followed by this area right here. The 4-hour time frame is going to show you majority of what you need to know as far as trading goes. Look at all these great trades that we had that week, all these great trades we had this week, pull back down to this area. And all I do is I pull them across there, but I don't trade micros that often. So that's why you don't see my micro chart. But let's go ahead and go over here. So on the 4-hour time frame, where's the first point of interest that we're looking for when we really start to fall down? It's going to be right here, the bodies of these two candles, not the wicks. We will fall to the wicks and stop, but the bodies of the two candles would act as like a demand zone, right? So then you click here, get a trend line, and you're going to put a trend line there. So now for the demand zone, we're going to go ahead and put it on the trend line to the tops of this candle right here. And so you hit that in-between point. And we'll place it right about there, right? So now you have your demand zone, your floor, the area that we're looking to fall to. So this is your prime demand zone. So I will put a text bubble there. And I'll put DEM0. And this is the lowest demand zone that we're looking to hit first before we have a massive reaction to the upside. And it's just about $100 down. So it's like $90. I think we went up to 60.54. Yeah, that's basically $100. So basically $100 fall would get us down there. The primary demand zone and the area that we fall to right now, that we keep falling to, you're just going to put a alert line right here. And you'll see it. This is an area that we keep falling into. This is your primary demand zone. And you're just going to put it through this candle right here. Okay? And if you look, you can see we went exactly to the bottom of that demand zone. We reacted and we went out of it. We come into it, we react, and we go out of it. So where's my supply zone? Where's the top of my chart at? Well, you're going to start that right here. You actually have a wide supply zone because of how far we push down. So we're going to go ahead and create an alert there. And we're going to put our supply zone where all of these candles meet with this wick here. And then we're just going to go up to right here. So you do have a much larger supply zone that we're working towards. And that is going to end at 60.54. But it's going to start at 60.42. You see we went to 60.42 again and we fell. That is why my supply zone starts here instead of up here. I want to go to a common area. And if I zoom in on this area right here, you see that this is pretty much right here. This is pretty much right here. This meets here. But the bodies of these candles are right there as well. So that body of that candle is a very interesting point to me. And I want to put a trend line through it, take the trend line across, because when we come up here, we're going to react again, just like we wicked into it there and we fell down lower and then we fell all the way down into the bottom of the demand zone. This is the range that we're currently trading. And notice, we are very much trading this range. We finally went up there, finally broke out, went to the high, came back down to the low. Now we're going back up to the high again. And that is the $600 mark. This is like $654 right here. I mean, $600.54. But we keep coming to the highs, and then you have these equal highs right here. So this is where I took my trade from earlier that you guys saw push down for $150. But you guys saw me make 2 trades, get a couple $100. And that's pretty much what you want to do when you're starting out as a single trader. Let's say your goal is $250 a day. Don't instantly try to get the $5 move. Try to get 2 125s or a 137 and a 125 to get your 250. Make it easier for yourself. Always take the easy money. Give me 1 second. I'll be right back. All right, so we're back. So a lot of people ask me, what indicators I'm using. And to be honest, I'm not using indicators. I have the 9 EMA, which is this green line here on my screen. This yellow line, which is the 23 EMA, and the red line, which is on this particular 4-hour time frame way down here on my screen. Now, the one that I do trust the most would be the 200 EMA. But this is what you need to understand about the EMAs. As you change time frames, the EMAs change as well, and they start to be less and less accurate. So the lower the time frame, the less accurate they tend to be until you get back to the 1 minute where they start to tighten up again. And that is why I don't use EMAs or anything. Like the one they're going to shift. Now what I will do is I'll use the 200 EMA, right? And I'll use the one that's most likely the one for the day. And as you guys can clearly see, the 200 EMA for the 5 minute has been the EMA of the day. We broke below it, and this is exactly how I use it. We break below it, we touch my demand zone, we get back above it, I take a trade to the upside, and then all I need to do is protect about a few dollars depending on when I get in. If I get in at the right time, this one wicked out or whatever, so that would have been a lost trade. But normally it comes above it again, and you just stay above it, just like that. Stay above it, and then eventually we work our way back down to it, and we might break through it going back down to the demand zone. So then that takes you to the 15 minutes 200 EMA, and you got to find that. We're already touching the 15 minutes 200 EMA as well, so we're gonna have a nice little reaction off of that. Once we break below the 15 minutes 200 EMA, I'm not going to the 1 hours because the 1 hour is gonna be way down there. Where I'm going is my demand zone. So if we break, let's say we break this level of 60.14, right, and we start to get below the 15 minutes 200 EMA, automatically I'm going to start looking at the demand zone. Why? Because at 10 o'clock in the morning we came down there, so why wouldn't we come down there again? We went to the high from the pre-market, we passed the high from the pre-market, we created a new high over here at 1 o'clock, we came back to the high again at 1:45, we came all the way down here, and now we're looking like we're going to break through it to go to 596 on SPY right there, but also come to 60.13, once we break that, I'll be looking to get to either the bodies of these candles here at 60.03, which is a $10 move, or all the way to my demand zone again. But we'll probably just stay in this general area here. But as you look at it holistically, we're just holding a range. This is the range. The bottom of the range, top of the range, top of the range to the middle of the range, bottom of the range to the middle of the range. And it happens like this all the time. Bottom of the range, top of the range, or at least from supply demand zone to supply zone. Went up higher, came down to the middle. Whenever we go up higher, we're going to come to the middle. We're not going to go all the way back down right after. We're usually going to come to like a support area like this right here, right? Then we'll be in the support area for a little bit, wick back up to a little bit higher, and then come all the way down to the demand zone. And then we'll be on the bottom half. We'll start trading the bottom half for a little bit like you're seeing right here. And then you'll see us go all the way back up, try to get back up to the demand zone. And a lot of times what will happen is if we can't get all the way up to our supply zone or whatever, we'll see a much larger fall coming in the future. So if we can't consistently stay up in this area here, we'll have a nice little pullback. We'll pull back to like the 1 hour time frame, which is like way down here or whatever. But that's not something I'm counting on the daily. So for my intraday and my scalpers, when you guys ask what the best time frame is, it 100% is subjective. It completely depends on the trader, right? But I feel for scalping personally, 1 minute, 5 minute are the best because they offer up the best possible entries. You know exactly when to get in. And then for my intraday holders, 5 minute to 15 minute are the best because a lot of times your 200 EMA will act as a launch pad for your trades, and you'll get some really good trades off of the 200 EMA or going through the 200 EMA. Like here where we're falling and we're bouncing off of it, I'm not taking these trades. After I see this wick here, I'm waiting for us to go up and come back down through. Once we come back down through, I know I can ride that trade all the way down to the demand zone or to the support level that was left behind here from the wick up at 8:30, right? And then when we start to go back up, I wait for us to get above it and hold above it. And once we get above it and hold above it, this is where your 9 EMA can actually help you out a little bit. Once you're above the 9 EMA, you'll pretty much stay there the rest of the time. You see here, we weren't quite above it. We went back through it. I wait till we hold above it. We held above it right there with the body of the candle. I take this candle, not this candle. I would take this candle right here and then ride the trade up. And then of course we get to the high and we reject it off of the high. 599.20 on SPY. And 60.34 over here. Really 60.35.75, but whatever. Splitting hairs at that point. And you guys saw us take both of those trades. So let's go ahead and get back to drawing out more points of interest, right? Because you need, as you can see, it's not quite right. Not the daily, the 4 hour. So now what we start looking for is we start looking for consolidation and points of equal lows and equal highs. So we see an equal low here. We'll add an alert. And then we'll take this line right here and we'll draw through the alert, right? And you're gonna see how cool this works when we actually go to different time frames. All right, then you have one that's a little bit lower, and you do both of these. You do both of these because they aren't exactly the same, but they will have various reactions on the lower time frames, which is why you add them in there. Then you're gonna do the body of this candle right here with this wick over here on the left. So you look at that wick and this candle, they make an equal high. We'll go ahead and mark that out. Boom, boom, pap. And then you'll draw this. Okay, you got these wicks that are about the same as this body right here. So you're gonna mark right here. And then you're gonna draw that out. Stretch it all the way across. You got this one hits, this one hits. You got these marked out already. This one right here is another point of interest. You got equal highs right there, several of them. You're gonna go ahead and do this. Now we'll start looking for some of the equal lows in the lower points. You have an equal low right here that we keep bouncing off of. That's literally the 200 EMA is at an equal low with that candle right there from the 4 hour time frame. Go ahead and stretch it across to that. Okay, so the next area is going to be right here where you get equal highs and lows across this. Draw that out. Uh-oh, didn't mean to do that. Click this. Now you're going to draw that out. All right, you got another equal low right here. That's a super important one because usually when we bounce up out of a zone, we're going to end there or start there. So we're going to go ahead and mark that out. And then we're going to start going back in time. So we're going to go to the 1 hour time frame right here. And we're going to mark out a few places on the 1 hour time frame where we have breaks and stuff. But as you can see, even on the 1 hour time frame, we're already hitting all of these lines on the 1 hour time frame and reacting strongly off of them. Isn't that so cool? We drew this up on the 4 and it's telling the story of every time frame. So now we're going to put another alert right here. This one, equal levels right there. All right. And then that's going to give you more places to take trades from on your lower time frames. The more accurate these are, the better your trades are going to be. I promise you, the more accurate these are, the better your trades are going to be. It's so awesome. Okay, so we always add the middling ones, the ones that have a slight space between them, because you'll have reactions from both sides. So you see us breaking, heading towards the low again. See if we can find any others. Look at that 4 hour time frame, already marked this out. 4 hour time frame, already marked this out. 4 hour time frame, already hit this point. We got a slightly lower one right there. That's a point of interest as well. Add an alert to that, and we're going to go ahead and mark that. There's going to be some reaction off of that area as well. All right. Then as you start to go to the 15 minute, you're going to really start to see it. Look at that. 200 EMA is in line with one of our blue lines. That is a great trading opportunity. Equal lows, let's go to the upside. Equal lows here, let's go to the upside. 15 minutes every now and again, when there's points of interest like this, I will mark them out, and then I'll stretch them out, and then I'll take them to the 1 hour time frame, and I'll stretch them on the 1 hour time frame as well to make them larger. And then that'll give us some points in the 15 minutes. And then after that, that's pretty much all I do, because the rest of these trades are going to be taken on the 1 minute time frame. We'll give this one a good one. This is a good one right here on the 15 minute time frame. We'll go ahead and mark that one out just because we hit this a lot. Then we'll go to the 1 hour time frame or the 4 hour time frame. You'll see it as like a little line, and you just stretch it out for the month. Stretch it out for the month. Just another area for it to react off of is all it is. And now as we go to the 1 minute time frame, it's going to be really clear when we refresh. Boop. Then boom, look at all these levels you can take trades off of this line right here, and it goes to this line up here. You see this hard stop right there. There should be a line there that I didn't mark out at some point in time, but you get the gist of it, right? It's going up there and stopping, going up there and stopping. But even that is a $4 trade right there that can net you some nice little cash, right? Taking it from here, 200 EMA down, blue line down. Literally, it's curving to meet my blue line, and then it's pushing down from that point on. And this is so simple. I know it seems so simple, but it works so well. And I'm just following the trend, watching all of the little hits, watching the place where we hit. That was the high. This is resistance. All right, it's time for me to go pick my daughter up, guys. But I hope that left you with a very helpful understanding of how to break down the 200 EMA as well as the 4 hour time frame, and realize that I do use the 200 EMA sometimes to trade, but majority of the time I'm trusting the trend and I'm using these blue lines to give me the best moves. Look at that. We wicked up to this blue line right here, fell down. What is that? That's 32 to 27, a quick $5 trade right there. But then it went even lower after it pulled back to the 23 EMA, and that is why I have these here as visual references, because every now and again they'll say, hey, stay in a trade or exit a trade. If we break through and we're just going up and up and up, I'm going to exit the trade. We don't break through the body of a candle, then I'll hold my trade a little bit longer and see if we push down further like we did here. You know, and look at that. We just touched that blue line and you heard my alert go off, and then we broke that blue line and we went where? To the next blue line, rejected a little bit. So now we're trying to head for this one right here, and also the 200 EMA. Isn't that so cool how that happens? But either way, 14 to 18, quick $4 trade. $5 trade if you took it from down here, which you could have just taken it from down here. It stopped perfectly 1, 2, 3 times to tell you that, hey, this is a safe location to take your trade to the upside. Take your trade to the upside. You can get out at any of these points, or you can hold it for the pushback up to the 1 minute 200 EMA. We already bounced off of the 5s, so it's giving you an opportunity to come. And like I was saying, the 5 minutes 200 EMA has been the best EMA of the day, giving up the biggest and best trades. But look at that. This is 8:30 in the morning. 8:30 in the morning, we wicked right down to this blue area here. And I'll tell you this, to be honest, my ES chart is much more accurate than this chart, which is why there's so many more lines. Which is why there's so many lines as you're going through and stuff like that, because my ES chart is more accurate than this chart, the chart that I just drew on MES. I do have to chart the new highs and stuff like that, but I've been able to understand where to trade those from even without drawing a bunch of lines on the screen like this. But this is what you're seeing. You're seeing my breakdown of all of the different time frames as smaller trades or whatever. And when you're in the 15 minute and you refresh, You have a lot more lines, but you have a lot more opportunity to take great trades. Look, they went blue line to blue line. That's how accurate these lines are for support and resistance. And what these become is exactly that. These become your support and your resistances. We go up to resistance, we hit it, we fall. We come from support, we go up to resistance. We finally break resistance, we go up to the next resistance. It's so cool how simple it is when you're using the 4-hour time frame, the high time frame rules. The 1 minute, the 5 minute, the 15 minute, follow the rules of the 1 hour, the 4 hour, and the daily. I don't use the daily because that's not necessary and those candles are too large. The 4 hour is plenty. All right, thank you guys so much for checking out the video. I'm going to check you guys out in the next one. As always, take the easy money. This has been another full transparency trading session where I am your host, Sebastian. You guys have a great day and take the easy money.